First, let's talk about the complementary roles of Bank Negara Malaysia and the Security Commission Malaysia in building the Malaysian sukuk market. Bank Negara Malaysia acts as the central bank and prudential regulator by ensuring overall financial system stability and soundness, regulating Islamic bank and Islamic financial institutions, issuing Sharia standard through its Sharia Advisory Council, and supporting liquidity management through instruments such as Malaysia Government Investment Issue and the Islamic Interbank Money Market. In contrast, the Security Commission Malaysia functions as the capital market regulator by overseeing and developing the sukuk market, approving and regulating sukuk issuance, issuing comprehensive sukuk guidelines, and ensuring transparency, investor protection, and Sharia compliance at the market level. Overall, both institutions play a complementary roles, where Bank Negara Malaysia safeguards systematic stability and Sharia consistency, while the Security Commission Malaysia drives efficient market development and strengthens Malaysia's global leadership in the sukuk market.
What was the single most important catalyst in the growth of Malaysia's sukuk market? Because it created conditions the private sector could not. First, through sovereign sukuk issued in 2001 and 2002, the government established a risk-free benchmark yield curve which reduced price uncertainty and enabled corporate issuers to value sukuk constantly. Private issuers depend on benchmark, they do not create them. Second, government issued signal credible political commitment and policy certainty, assuring investors that Islamic finance was a long-term national agenda rather than a temporary initiative. This significantly reduced regulatory and political risk. Third, sovereign sukuk attracted institutional investors, generated liquidity and built investor confidence at a time when sukuk demand is still developing. Beyond issuance, the Malaysian government acted as an innovator in sukuk market. It pioneered the world's first global sukuk wakalah and introduced the first green sukuk, aligning Islamic finance with ESG goals. This innovation involved high sensitivity which private firms typically avoid. By solving early risk, the government demonstrated flexibility and set standards later adopted by private issuers. This did not crowd out the private sector. Instead, it enabled private growth by reducing legal Sharia and market risk. Therefore, private sector expansion is to follow the government leadership, making government involvement the single most important catalyst in the Malaysian sukuk market growth.
Let's look at the trace the evaluation of sukuk Islamic bond. In the early sukuk concept in 1990s, Malaysia used simple buy and sell contract, which are called buy with amat ajil and murabahah. It was like a cost plus profit deal. For example, a company will sell an asset to the bank and the bank will sell it back at a higher price to be paid later in installment. Next, the move to lease-based sukuk in 2001 until 2005. Malaysia moved to ijara, which is recognized and accepted everywhere in the world. So, instead of buying and selling, this is based on renting. A company sells its building to investors and then rent it back. The investors get the rent as their profit. Next, the shift to the partnership models in 2005 until 2010. As the project became bigger, companies needed more flexible ways to raise money. They moved to partnership models, which are called musyarakah, joint venture. Investors and the company both put the money into a project. They share the profit and also the risk. And another one is mudarabah, profit sharing. Investors provide 100% of the money and the company provide the expertise or work. Lastly, the rise of hybrid and wakalah structures in 2010 until now. Today, Malaysia uses structures called wakalah agency. Investors appoint the company as their agent to manage a mix of different assets to make a profit. And another one is hybrid sukuk. This is a mix and match structure. It combines ijara, murabahah, and others into one package.
For the next part, I'm presenting a breakthrough in the financial innovation in the issuance by the Tadao Energy, which launched the world's first green sukuk in 2017. Tadao raised $250 million in to finance a large-scale solar power plant in Kudat, Sabah, proving that Islamic finance is a powerful solution for a modern environmental challenge. Looking at the structure, Tadao utilized a hybrid istisna ijarah model that used istisna to fund the construction phase and then transition into the ijarah mausufah bil azimah, which is a forward lease contract. This allowed the investor to fund the project while it was still being built. This structure ensured the Sharia compliance by replacing interest with the profit from the physical asset, where investors gain a profit to a rental payment over a 2 to 16-year tenure. By holding the ownership of the solar infrastructure, investors can avoid riba. Furthermore, it transformed the Islamic concept of khilafah into a tangible financial instrument. The true impact of this sukuk was its ability to bridge two different worlds. For Islamic investors, it provides a rare opportunity to diversify into a renewable energy to a halal asset-backed instrument. But for a conventional investor who may not have been looking for a Sharia product but were attracted by the project dark green certificate, which met the strict ESG criteria, environmental, social, and governance required by a modern global funds. By combining the Sharia principle with a green bond, Tadao Energy achieved double liquidity. They didn't just target Muslim, they target the entire global sustainable financial market. This combined appeal is why this sukuk was oversubscribed by the 2 times, providing that this sukuk can attract a much wider global audience than a traditional bond.
To maintain Malaysia's global leadership against rising competition from GCC and Indonesia, we must move beyond traditional models. My recommendation for leveraging financial technology is to transform our market into a technology-driven ecosystem. Our core strategy focused on 3 pillars: efficiency, accessibility, and transparency. First and foremost, our first move is the establishment of a national blockchain sukuk platform. This move isn't just about digitizing records, but rather about fractional ownership, which allows for large-scale infrastructure projects to be broken into smaller tradable units. Hence, by utilizing smart contracts, we can automate profit distributions and principal repayments, removing human error and significantly reducing the cost of issuance. Second, we would like to address the return gap through tokenization. To second this is due to we are moving to a full integration where digital sukuk life cycle is seamless from issuance to secondary trading. This also allows for real-time auditing, providing investors with instant proof of asset performance. Thus, it will lead to mass market launch, where opening sukuk investments that are previously reserved for institutional giants to the average Malaysian investor, with much lower entry barriers. Finally, technology must be backed by trust. Malaysians can set the global gold standard through regulatory leadership. To do this, we will align with Bank Negara Malaysia's 3-year tokenization roadmap to ensure our financial infrastructure is future-ready. This aspect can be supported by the Security Commission's new regulatory framework, which provides the legal certainty digital investors need. Most importantly, we will pioneer the Sharia compliance tax standard, ensuring that as the tech evolves, our adherence to Islamic principles remains immutable and transparent on the blockchain. By executing these 3 phases, Malaysia doesn't just stay in the race, but we redefine it, ensuring our sukuk market remains the most innovative and accessible in the world.
Next, I will explain how Malaysia can maintain its global leadership in the sukuk market through an ESG-focused strategic roadmap. First, Malaysia faces several key challenges, including rising global competition, liquidity constraints, and the need to balance Sharia standardization with innovation. In the short term, Malaysia should establish unified ESG Sharia governance framework for sukuk issuance. This includes standardized ESG criteria, consistent impact reporting, and clear Sharia compliance guidelines that align with international sustainability standards. This reduces regulatory uncertainty and increases global investor confidence. In the medium term, Malaysia can expand ESG sukuk across sectors such as renewable energy, sustainable infrastructure, healthcare, and education. This helps attract long-term institutional investors and improve market liquidity. In the long term, using ESG as a tool for market resilience by financing projects with long-term social and environmental value that remain essential even during economic downturns, such as sustainable infrastructure and social development initiatives. By embedding ESG objectives into long-term national development financing, Malaysia can ensure continuous demand for sukuk insurance regardless of economic conditions. Overall, by integrating ESG into its sukuk market, Malaysia can strengthen competitiveness, improve liquidity, and ensure sustainable growth while remaining aligned with Islamic finance principles.